All right, that is the word coming in from James Bullard. But let's now talk about all of the cues that we should track as we get into this all-important trading day. We have our research team here with the trade setup. Ekta, Mangalam and Surbhi are all with me to take you through the trade setup and really prep you for this trading session. Guys, a very good morning to all of you. Ekta, how is it looking this morning? Because yesterday, like we know, and pretty much this entire week has been quite rough for us.
Well, yes, no doubt, Pavitra. Morning. Well, the markets did fall for the fourth straight day yesterday. It was the biggest losing streak that we've seen in around 5 months. The Nifty closed at 17,554. The advanced decline ratio, which indicated the broad-based selling, in fact, was the lowest that we've seen since 27 Jan. All of the sectoral indices ended in the red yesterday. FIIs net sold around 579.8 crores. Remember, they were buyers in the previous session. DIIs net bought around 371.5 crores. Fears of overall further tightening, the Adani Group rout that we've seen in terms of stocks as well as financials seems to be weighing on the markets at this point in time. Now, in terms of the global cues, that seems to be top of mind again because we moved to the global tunes yesterday. So the US markets ended mixed overnight. The FOMC minutes members have indicated they want to continue in fighting inflation. However, Asia is largely positive. SGX is positive. One of the reasons why the Indian markets might be possibly on the front foot is because Brent crude has corrected further by around 2 to 3% overnight, down to around $80 per barrel. The big Q is F&O expiry today, and just watch out for the financials because the Bank Nifty ended lower for the 5th consecutive session. It is now below 40,000 for the first time since the 17th of October. And separately, we did have some comments come in from the RBI MPC meet as well. So financials would be top of mind in terms of an index as well as the F&O expiry as a whole.
All right, we will watch out for the financials. Ekta, thanks a lot for taking us through all of those cues. But let's also talk about some of the other stocks that could be in the news today based on some news flow that came through. So Surbhi is here with that entire list. Good morning, Surbhi.
Hi, morning. Few names that I'm tracking this morning. The first one is the entertainment, where NCLT admits IndusInd Bank's insolvency plea against the company. The next is Hero Moto, where the company initiates operations of public charging infrastructure in Bangalore, Jaipur and Delhi. They set up 300 charging points at 50 locations across these 3 cities. HG Infra, the company has been declared the lowest bidder by RVNL for a bid cost of 466 crores versus a project cost of 535 crores. Tata Steel, where the company has acquired 4.68 lakh shares of NINL worth 300 crores. This is as the first tranche of investment in the company. Orient Cement, where the company's non-binding MOU with Adani Power Maharashtra stands terminated. Sonata Software, the company's wholly owned subsidiary, acquires a Texas-based IT company, Quant Systems. And lastly, Mahindra CIE Automotive, where the company declares its Q4 calendar year 2022 results, where the revenue is up 35% at 2250 crores and an EBITDA margin saw an expansion of 300 basis points at 13% versus 10% same time last year.
All right, Surbhi, thanks a lot for taking us through that entire list. Of course, you know, the oil impact will also play out. So with crude at 80, watch for all of the usual suspects. But with that, let's also talk about the cues from the F&O space. Mangalam is here with that. Mangalam, it is expiry day and it's really not been the best series.
Well, it hasn't been the best series. It is Feb series expiry today, and this series so far, we've lost about 338 points on the Nifty. But guess what? You know, almost 90% of those losses have come by in just yesterday's trading session. The Nifty was down 270 points in yesterday's trading session. Not much to write home in terms of cash flows because, you know, for a 270-point decline on the Nifty, you would have assumed that the FI selling is a lot more than just 580 odd crores, and the DII buying is, you know, a little less than 372 crores, or both institutions are selling, but that wasn't the case to be. The selling is mostly on the futures side. The FII sold almost 2,700 crores in index futures, 351 crores were sold in Nifty Bank futures, and 2,400 crores were sold in the Nifty futures itself. And that is what the real worry is, because the SGX Nifty is indicating a positive start, and that would be perfect opportunity for the bears to short the gap up. 40,000 shorts added by the FIs in yesterday's trading session. They've bought 8,800 crore worth options, and they've bought about 1.5 lakh calls and puts each, perhaps playing for either a breakout or a breakdown of the narrow range that we've been trading on. 17,700 call added about a crore shares for a premium of 14 odd rupees. 17,400 put also added about 30 lakh shares for a premium of 10 odd rupees. But the option selling suggests that, there is a fair amount of resistance on the way up. We've seen 1.37 lakh calls being sold for just about 66,000 puts being sold. Where are those resistance marks? 17,600 upwards is a fair amount of resistance. That's where the SGX Nifty is indicating a start. The Nifty is below the 200-day exponential moving average. The SGX Nifty is indicating a start around those levels. At the lower level, a bigger support will come in at the 200-day simple moving average. The Nifty Bank is also below the 200-day exponential moving average. The 200-day moving average, simple moving average support comes in a little over 39,150.